Okay, hello, a mini trader. Welcome to Trading the Trades podcast. This is the second episode. Kind of introduce yourself for me and how long have you been trading? How's your journey going so far? And yeah, let's start with that.
Okay. And I'm just gonna go by my Discord name, Eminis4TDF, the number 4 TDF. Um, I've been trading for off and on since 2004. I started. I failed, and this is about my fourth try or so. I'm in California, USA, and I don't really do any social media. I don't do YouTube. I'm just on Discord, Eminis4TDF, and that's pretty much it about me. I trade the E minis. That's the only thing I trade.
I really like that you kind of like keep coming back, not giving up. That's awesome. Like not giving up is something one of the biggest assets you gotta do as a trader. Like eventually you're gonna make it, but it's a hard, rough journey, I guess. Like, and you're gonna find yourself in a lot of holes, in a lot of mental strugglings you had to get through along the way. But it's awesome to see that you can always kind of come back. And for what I've heard, like this is now also like kind of the first time that you finding kind of real edge and like back tested edge and kind of profitability really. So you did get
um,
some payouts, right?
yes, I do prop trading. I have had some payouts. Um, I would say I think, like I said, I think this is my fourth really go at it. I can say that for the first three times it was definitely a loser. I didn't make any money. I lost a lot. And this time when I started during the COVID, during the pandemic, um, developed something, started off losing again, of course, and have got to the point where I consider myself a break-even trader now. I do make some profit, some losses, some profit, but definitely not overall loser anymore. So I've at least progressed to that point. But I'm not making money every single week or every single month yet. I haven't got to that point.
Yeah, but I think like just if you can stay in this game and just like get payouts at all, like I do think like especially with prop trading, if you look at the statistics, like how little people are actually getting paid, if you kind of manage to get payouts kind of consistently, like you are already in my opinion, like kind of up there. And that's just like a small step that you need, and then just maybe some little things you need to tweak and fix. Maybe just stick to your rules a little bit better if you kind of was one of those guys struggling with that, or just maybe fine tuning some playbook setups or like sticking to some different setups, adjusting to market conditions and stuff like this. But you're pretty close there. If you're break even, like I think like the longest journey is like from losing consistently or blowing up to just getting to break even, and then from break even to becoming consistently is kind of less of a jump. So especially from what I've heard talking to other traders.
Yes, I would say that's pretty correct. I would say what's most likely, or I should say, the biggest percentage of what I'm not um, being consistently profitable is just the psychology of it. Um, a little bit, I would say, money management, but I pretty much have that down. I would say it's more psychology, and every once in a while, I'll make a money management mistake where I don't know where my stop is getting into a trade. I will do that sometimes and realize I don't know where my stop is. So, but yeah, the strategy I have, which is partly discretionary, so it's not something that, hey, this moving average crosses this and this happens and then I take it. I don't have a strategy like that. Mine is more like guidelines, which is what I got from one of the YouTube videos of hundreds of trading videos I've watched. I have a lot of guidelines. I have a few rules, and I have a lot of guidelines. And but I would say psychology, which is I would say 80% better than it was a year or two ago, is still preventing me from getting consistently profitable, but it's getting there.
Yeah, that's the most important thing I think. Like most people, like then eventually like they struggle with psychology. Yeah, it's the hardest part. Like even consistently profitable trader still struggle with that. Like still from time to time have these huge losses that then you really need to take a break and need to recover from. So what you hear basically on the internet, stuff like this, and even like traders that are actually really good, like if they take big losses, it kind of messes them up as well. So in the end, like as soon as anomalies involved, the emotions come in, and if the emotions involved, it's difficult.
Yeah.
So kind
Yeah.
of take us through your edge basically. Like we kind of like this for the guys who are not from Discord. Like this is our second time recording this because I kind of messed up the audio on the first one. So that was a mistake on my part. So thanks for coming on again. And I'd love to like kind of show them your edge basically. And so maybe give us your screen if you want to, and just kind of talk us through your strategy, your rules, your and especially those 380% scenarios.
Okay. There was a couple of charts we didn't go over last time, so I'll kind of start with those real briefly. So I guess I will. First thing is, see, I forgot how to do this. Share your screen, then window, and then what is it? Oh, I think it's this one. Okay. You can see that now, right?
I can see that right there.
Okay, and actually because on the Zoom it may be, I don't know, like a little blurry. Let me try to let me see.
It's fine.
Sorry. Kind of just zoom out a little bit. There we go. Okay.
Yeah, nice.
So this is my daily chart. I have the 50 and the 10 moving average. I really don't need this 5. I added it for something, another different strategy I was looking at like a year ago. I just never took it off. So I look at this kind of just overall where we're going, where we're headed in a way. I pretty much only look at this chart once or twice a day, like, you know, beginning of the day and maybe any reminders of any gaps, which actually on Friday we had a gap fill here, and I actually didn't look at it again to remember that gap fill. But yeah, things like gap fills and stuff like that. I'm looking at the stochastics right down here and just kind of seeing overall where we're at. And the lines are just pivot points, support and resistance, R1 and R2 for monthly, and R1 and R2 for weekly, the thinner lines. So that's where I'm at now. That's where I start. And because of these candlestick patterns are here, I want to discuss these because I do use price action as far as what the candlestick patterns look like. And the biggest, I should say, biggest, that's not the right word. The most useful candlestick pattern I found is what I call, and I got this from a YouTube video, a 382 candle. I've discussed that in the Discord room, and we just happen to have 2 back-to-back ones. So a 382 candle is when the whole body is above or below. If you drew a fib line from the top to bottom, the whole body of the candle is above the 382 fib or below the 382 fib. So we had one on Thursday that I call a long 382 candle, which means the top of the body was at the top, and looks like that indicates that we're going to go up from that candle as long as we don't break the low. And that's what we had Thursday. And on Friday we did go up. We formed a exact opposite candle of a 382 south, a short candle. So looking at it going into Monday, I'm very cautious because we've had 2 of these. One doesn't really precede the other or more powerful, in my opinion. It's just maybe the latest one, but you just don't know because the first one hasn't been broken and since the bottom has not been taken out. So we don't really kind of know, kind of confused on Monday. The daily chart does not really telling us a lot. The gap's already been filled, so we don't really know much from the daily chart yet. But that's what I start looking at there.
Nice. That's kind of interesting to see. Like, obviously, this probably doesn't have done any value like in the far future, but like I'm at the same place, so I did my pre-market prep and stuff on the higher time frame, and I'm also like we're kind of in where land right now. I think like it's very balanced. Like sellers, we're in a huge range, pretty much in a multi-day, multi-hour range. In my opinion, from a kind of volume profile aspect as well, and they kind of like pivoting around. And we basically don't know where we want to go. Like they agree, like buyers and sellers, in my opinion, are pretty much agreeing on the current price right now. And I don't know where we're gonna break, but usually if we like in a range for very long, like the longer a range goes, the more volume it's accumulated there, like the bigger is the move. So I don't know where we're going, but we're going like I think a long way. Like the next breakout's gonna be a big one, like probably gonna fill the unfilled gap down in the 4300. So like maybe take us really up to the highs again. Like I think this.
There's also another pattern, what I call a DT, a double top from this date, which this Discord thing is covering my date. I'm not sure what date that is, but whatever this date is,
16.
we made a high. We made a high. We came down. We made another high, basically only a few ticks or maybe a few points above it. So that's a double top. And there's the neckline here on can't see the date either on that either, but looks like the 28th or 27th. Oh, I can hide this thing. I didn't see that.
26.
There we go. 26. Yeah, so the 26. So that's the neckline. So really, I'm looking at over the next several days, are we going to break this low, this neckline, which means I think we'll go down quite a bit, or are we going to rebound and break these double tops? So that's what I'm kind of looking at overall the market. That doesn't really help you, obviously in a trade next 15 minutes or so, but just kind of overall where we're going.
And you go down the time frames, like basically like what I've known, like you kind of want to see confluence on the bigger time frames with the smaller ones, right?
Yeah. So so then once I kind of know the overall daily, again, I only look at this chart once or twice a day. We discussed this earlier, or I should say on the other recording that didn't come through, with the daily average. I'll get into that more. But that daily range average right now is including the 2 type of holidays we had. So kind of like a little off, but it's very useful. I'll discuss that a little bit more. So then I go down to 2 hour, which I didn't go over last time. My 2 hours just kind of getting in between my 30-minute and my daily. Just wanted something in between there, and I wanted something to keep track of naked PLCs, which I'll discuss. So this average is a whole 20 period moving average. So basically it's 20 bars in a week. So basically it's kind of like a weekly average anyway. So kind of want to see where we're at on the 2 hour basis, the daily. And as you can see, we're going down. But we're back, we were back above the 20 moving average. We closed on Friday a little bit below it. So it's kind of like, not really sure, just like the daily chart's really not giving us an indication, at least for me, what I know. Maybe someone else who's smarter than me. But for me, I don't really get much out of this. It's just, kind of like indecision right now. Don't really know. So the naked PLCs with it, I didn't discuss. I'm not sure if you use those, but those are any PLC that hasn't been touched after the day it was created. So once a PLC is created, like this was on Wednesday, since Wednesday, this was Thursday, and this is Friday, we have not came back and touched that PLC. So it's called a naked or a virgin PLC. People have different names. I keep track of those because those are excellent target points because there's a lot of liquidity. So when the price gets near those areas, it's going to touch those areas most likely almost all the time if it gets near it. And as you can see, I have 3 of them. I track them until the contract runs out. Once the contract runs out, I pretty much start all over because it's totally off. So that's that chart. I don't know if you have any questions or comments that you want to make on this chart.
Nice. So and then kind of do you look at low nodes and high nodes? Obviously, you look at the POC, but like kind of do you use like so the basically low node and kind of bell curve concept? Like I don't know if you're really aware of that, like the auction market theory concept with as well. So like with low nodes being kind of resistance and price trading inside these profiles unless the low node is broken, or do you?
I don't really use it that way. For this chart, I'm basically the biggest thing I get out of this chart is is it agreeing with the daily, and where is it in relation to the naked PLCs, and just kind of a little bit more focused than the daily. Obviously, it's a little bit more down. It's not as big as time frame, so just kind of seeing where we're at. I don't look at the the volume profile on these charts. It's there and I see it, but it's not something I'm going to look at that more on my 5 minute chart. But it's definitely there, and I can kind of see, go back a little bit, but I only have to go back because I already made the lines. Like this is Friday. Here's the PLC for Friday. We haven't traded Monday, so there's really no naked PLC yet because we have to wait till Monday to see if it's going to hit that. And then if it does not, I will draw a line saying, hey, that's another PLC that we have not hit.
Oh, nice. Awesome.
Yeah, so that's the 2 hour, and like you see, doesn't really tell me a lot right now. So we're going into Monday, at least as far as my opinion, we're going into Monday very mixed. Not really sure what the direction. Don't have a clear direction. Some days just kind of clear. Some days it's not clear at all.
I think Monday it's gonna be interesting, like going forward. Like I kind
Right.
of think we have more downside in it, but
We definitely could go
I
down.
think we're kind of ranging for now. Like unless
Yeah.
we're breaking out, like
Right.
pretty much
So
guessing.
then go down to my 30-minute chart, which I'm going to look at a lot during the day. And my 30-minute chart, in the blue box is the real trading hours because this is a 24-hour chart. So I identify the real trading hours in the blue box. I have a 50-period moving average, but it's a whole moving average. It's actually technically it's 48 just because there's 48 bars in 2 days. I made it 48. And then there's just the VWAP every day that's going to start. Everyone pretty much knows the VWAP these days. Of course, I got my stochastics, which is pointed really negative, but we're getting oversold on the 30-minute, and it's well below the whole moving average. So that may be telling us that more downside, or we may rebound. Not sure. So I look at this to kind of determine structure of the market between swing highs and swing lows. I got this again from a different YouTube video that I watched as far as how to determine a trend, because it's really kind of arbitrary when you're finding, what's a high, what's a low. It's really not something that's objective. It's really subjective. But the way I was taught and what I use is once we break the last high, and whatever that low was in between, that's the low. And then the previous high, I mark it with a dotted line. So as we discussed in the other one, this is the last high we made, which was, I don't remember what day that was. I don't know when I go back here if the Zoom is picking it up this quick. On the 30th. So we made this high on the 30th. And it's still the high. The low was made several days ago. I'd have to go back several days to get to that. This is the previous high. There's a dotted line. I keep track of the previous high when we're in a long trend. I keep track of the previous low when we're in a short trend.
You kind of
So,
use it to determine the strength of trend, like you kind of mentioned the other day, right?
yes. So what I do is if the market is still above the previous high in a long trend, it's still considered a pretty strong long trend. So we're still above the previous high. We're between the previous high and the current high. So I still consider that pretty strong. It's looking weak now, but who knows? It may rebound. So definitely going to be looking at what it does if it comes down to this level, or I guess from here, because we went down a little bit lower on Thursday. Just kind of seeing how to react in this level if we get down there. So the 30-minute market obviously is a little bit more zoomed in the 2 hour. And this is a 24-hour chart. So volume profile is a 24-hour chart. I don't base any of the 80% rules on that, which we'll talk about. So is there anything else left on this? That's pretty much it for the 30-minute. Just, I've kind of narrowed with the daily 2 hour, 30-minute. And some days, like I said, I'll get a clear picture from that of, hey, I think that we're definitely going up, definitely going down. And even that's not always right, but Right now, I don't really have a definition for Monday. I don't know if you do, based on what charts you look at, but I don't really
Not
have.
really,
I don't
not
really know
really,
what we're doing on Monday.
not really. Like a kind of little bit more short bias, but just overall, like kind of think we're ranging. Like unless we really see clear something change, but
Right,
right now I'm just think we're ranging basically, and unless we finally show something.
right. We could be ranging for a while. Sometimes the market does range for a while. We don't really do anything, so it's definitely a possibility. But definitely, if we come down, we're definitely going to see what we do in this area.
Yeah.
So, like I said, the market is pretty mixed. We have some signs of saying this is a. I mean, we're definitely still in a long trend, but have some signs saying we're going back up. Have some signs saying we're going down. So just kind of have to wait and see.
I don't know where lands. But
I'm
I do
definitely not in
think
the.
that the breakout, if we eventually break out, like who knows when, like maybe coming Monday, like I think it's gonna be huge. Like the next move gonna be a huge one. Like I don't know where, but but we're going. So it's just
Yeah, I'm
mental
definitely not
science.
in the prediction market. I
Yeah,
don't
yeah,
base my
yeah.
trades on predictions. I just like to know going
React.
into the day what I think,
Yeah,
and then once I have of an idea what I think, I look for confirmation of that idea.
yeah,
But
exactly.
right now, going into Monday, I guess for me it's a little different. It's more like I'm not looking for confirmation. I'm looking for a sign, and then I need
Yeah,
confirmation once I get a sign.
yeah.
So this is my 15-minute chart. Obviously, zoomed out. A little bit more focused on the 15 minutes now. Again with the 50 and the 20. Don't worry about the yellow lines, but the 50 and the 20 is the main ones. And I look for the 15 and the 30 minute for trading purposes. I don't need the 2 hour and the daily to match because that's just too far out. I look for the 30 and the 15 to match a lot. Um, and right now, uh, the 15-minute is getting bearish, but the 20 moving average is still above it, barely above the 50. Um, the 30-minute is looking bearish, like we looked at. So, and the 15 minutes, like it's about to turn bearish. So I look for those two to confirm. That's a big key in my trading. The 30 and the 15 being on the same level.
All right. And like things about this fascinated me the other day. Like that's what I'm kind of thinking about implementing in my trading and somehow as well is the purple box. Like what are you doing with this purple box?
Oh, okay, the purple box. So, um, I didn't even explain. This is another 24-hour chart. So the blue box is the real trading hours. From my time, it's 6:30 to 1:15 p.m. And that's just the real trading hours. So I can differentiate between that and the overnight stuff. The purple box is something I created. That's a volume indicator. So didn't actually look at, but I mean, mention that on the daily chart. So I like to look at keep track of the daily, or sorry, the 3 day volume average. So just to kind of give you a reference, let's go back to that daily chart. And that's down here. Hopefully you can see that.
Yeah.
At 1.1 million is the 3 day average of the ES. I just want that to be about a million is about average. So that's about average. If it gets higher than that, that's great. But if it gets down to 900 or 800, not really a big deal. It starts to get down to 700, that's pretty low. But other than that, I just glance at that and go, okay, it's in the range. We're good there. Um, and then I did mention the daily range, so I look at the 5 day average on that, and anything below 25 is pretty low. Anything below 20 is extremely low, and I probably won't trade. But this daily average is a little screwed because we really had 2 holidays back to back, 2 half days. So if you take out those days, I think it's closer around 28. Um, so we're still okay. It's still relatively small, but it is summertime. July and August is typically going to be smaller ranges.
Yeah,
Um,
that's something huge for other people to think about because if you think about your strategies, you and for example, like you can basically trade the same if the range and the volatility is not the same. Like you can't say like okay, I'm always using, for example, like 4 point stops or 6 point targets or like 5 point stops, 10 points target on the S. I think it just doesn't work if like you have average range on a day of 20 points, like this is totally different than when you have average range of 80 or 90 points like we had like last year. So so you kind of need to adjust your strategy based on that, because your targets and your stops, because it's just like a whole different environment basically, and you kind of need to implement this in some extent, I think, in your trading and volatility. Like if you're an order flow trader like me, like you kind of see it on the order flow anyways, how fast it's swinging and moving and how volatile it is. But if you're not looking at order flow and you're just price action trading, like you need to have some system in place, in my opinion, that kind of tells you the average, or using at least an average, the ATR indicator or something like that, that tells you like just the range, basically the average range you have. Like I think it's so important.
Yeah, the daily average range, I don't remember how I came up with that. I came up with that about 2 years ago. It's been so helpful for me. It's pretty accurate. When I say accurate, it lets me target stuff. Like if we have, say, for instance, it's an hour into the market and we have an 18-point range, and 35 is the average. I know for the most part, again, obviously the average could shrink, the average could expand. I know if we have an 18-point average after the first hour and the 5-day average is 35, we're most likely making new highs or new lows.
Yeah.
And that tells me to target stuff that, hey, if I have a target that I think is going to reach, and it's, I think we're going up, and if we start to go up, and it's, I don't know, 10 points above the high we have now, well, that's, if it's only 18-point range, 10 points above is 28, and the average is 35. I feel very comfortable going for that, and it's proven to be very good. I do occasionally get something where, which is just, I guess, luck, I guess, or whatever, or bad luck, good luck. Sometimes it goes like a few ticks right before my target and just turns around. But hey, that's just trading.
Yeah. Yeah, you can't base it like, I mean, like you said, like you can't base it off of single trades. Like every system, every strategy, every edge, whatever it is, whatever it may be, like you have your losers, you have your drawdown period, you have your like time that it doesn't work. But like if you add up like over like just a huge amount of numbers of trades, and you see it working more often than not, then it's something you should implement. Or like even if you see it less often working than not, and you can play it with a good risk reward, it's still something to go for.
Right. So yeah, that average has been really helpful for me, targeting stuff. Whether it's, I target a lot of naked PLCs or the R1 or R2s of the day, just pivot points or the high or low of the previous day. It just depends on where those targets are within the range of the average range. And just like the example I gave, if the average range is only, say 28, we're already at 26 points average, and the average range is 28. Well, I'm not going to target something that's way up at 35, 38 points, because we obviously can get there. The market can do anything. I'm not going to target anything that far above the average range. If it gets there, it gets there, but that's just something I would target.
Yeah.
So that's been really helpful. It's just a 5-day moving average. That's all it is. And on holidays, I adjust it. I just go back and don't count the holidays and just do it manually and just kind of see where we're at. So
Next
that's
week
that.
Is finally no holidays. Like next week is
Right.
full on trading. Like finally, like it's been 2 weeks, I think, like or 3 weeks.
We don't have a holiday till September now. So
yeah, no,
okay, so that's the daily. Sorry, that's the 2-hour. We have the 30-minute, and we have the 15-minute. Oh, okay. So the other thing besides the range is the volume. I already told you about the daily 3-day average. Just like that to be at least above 700. Anything above 800 is fine. Then I came up with this, and again, I don't remember. I would say if I had to guess, year and a half ago, I came across something and it made me research, and I went back and researched, and I saw that basically if the first hour, of the ES, now a lot of people, and I never said this at the beginning, a lot of people, if you're listening to this and you're a scalper, a super scalper, this is information that's really not going to help you because I don't trade that way. So finding the direction of the day is not really meaningful for someone who's in a trade for 30 seconds. That really has no purpose. So a lot of what,
Yeah, kind of like I do fully
not
believe
really. I mean,
like yeah, but
if your average trade is 30 seconds, you don't care what it's doing for the whole day. I mean, it's just not.
yes, and kind of no, like you wanna still like even if you wanna get all the probabilities in your favor, like even if you're kind of scalping on a very fast time frame, like obviously there's like some scalps you take just based off a big buyer that you see on the tape or something like that. That's a whole different scalp. Like, but if you're like having a point of interest in mind, like, and then you're just playing this 1 pound or pop, like you want to play it off of a level that kind of still gives you like some edge on the higher time frame because that there's like then a chance at least like if this really pops, like you can maybe get a pop that kind of even kind of then you can see all of the sudden like a lot of other buyers come in and like maybe get a huge win of it like
Yeah, you
so
can definitely can.
it's
I
like
just,
it's like
for most part though,
yeah
you're not gonna.
but
If your average trade is 15,
yeah
30
15
seconds
30
a minute,
seconds is yeah
you're not concerned with what the market is. 50, even 15 minutes from now. So you're not really. But for me,
yeah
I don't trade that way, and I'll go over my trading styles. But I don't trade that way. So, um, what I was saying was I came up with this, and again, I don't remember how. I know I did research, and I went back and just wanted to see the numbers. And I came up. I wanted a way to. How do I know if a day's starting off where it's just literally going to be lousy volume wise? Like, I just wanted to know, kind of get an indicator that at least kind of partially, or I should say, a pretty, decently accurate. Obviously, nothing's going to be accurate. The volume can pick up, it can slow down drastically. But what I came up with was based on the volume of the S&P being at about a million on average, million one, million two. I came up with an indicator that says that the first hour kind of determines how much value you're going to get that day. And I came up with three important numbers. And once I came up with those three important numbers, then I just made an indicator on my chart that changes colors based on where we're at. Um, Obviously, if you trade only in the first 30 minutes or hour, this has no use to you. But because there's always volume, typically in the first
yeah
30 minutes or hour, you'll get some volume. But um, so I have three numbers. Once the volume in the first hour gets above 200,000, and this is a light pink, which I don't know if I have an example of recently. Well, you can see it here. The day before, it's a light pink in the first. If it's of over 200,000 in the first hour, and then it turns to a medium pink, which is actually back on the original one that I showed you. This one, if it's over 250, it'll turn medium pink, and hopefully this is not going too fast for the video.
mm-hmm.
Um, Plain dark pink if it's over 300,000. So, I came up with a system of over 200,000 is okay volume. I kind of describe it as okay. It's like, it's not great, not at all. It's okay. It bare minimum. It's bare minimum basically what I want to the day to look like. I need it at least be 200,000 in the first hour. 250 is good, which is the middle pink, which is on the one I showed you on Friday. And dark pink is over 300,000. That's excellent volume for the day. So that's just something I kind of keep look at after the first hour to kind of see where we're at. So that's what
yeah
that is.
you kind of a lot of like you want to get a feel for the market, you want to know what's gonna do the rest of the day, so you
Yeah.
probably like kind of then base your trades later on in the day off of the information you got like in the beginning, I guess.
Yes. And also I look at that as in a way, like if we had a lot of volume over 300,000 the first hour, well then I may go for a target that's a slightly above the average range because we have a lot of volume that day, and with the more chances that the range may expand, and just the opposite. If it's a very low volume day, I may really shrink up my target because I'm like, this thing is probably not going to move very much.
Yeah,
Obviously those could be wrong at any time, but
yeah,
just playing the
it makes
numbers.
sense.
Okay, so that is kind of like how I start my day, looking at all that, either before the open or within the first half hour of the open, looking at that stuff. Um, um, a little harder to explain since I don't have the full chart, but this is the open. The dotted line is my 5 minute chart is not a 24-hour chart. So I purposely did that, one, because that's how I started trading in 2004, 5 minute chart. It's just based on real trading hours. Two, I don't want the pivot points, which is the red, blue, and green line, and the volume profile to be based on a 24-hour chart on my 5 minute chart. I want it based on real trading hours.
Makes sense.
So this chart is my real trading hours chart only. Again, it ends at 1:15 and starts at 6:30. So basically, I have three rules that kind of help to dictate direction of the day or a certain move. Okay, so there's three 80% rules that I have learned. They're pretty accurate. Obviously, they're about 80% right. When it comes to the ES, and I'll go over those. I think what's the first one I should go over? The first one is an 80% rule that says if the market opens in the value area, which is this green area here before the dotted line, because it's yesterday's. So if it opens in that green area, and it's 80% chance it's gonna hit that PLC from yesterday as well. As you can see, hidden by the candlesticks, you can see that PLC right here. Well, actually, I have a green line that I drew for the day. Here, that's the PLC. Well, the close in the PLC, actually, sorry, the close in the PLC was basically the same. So that's why that line is only one. I usually have two lines, which I'll show you on the other 5 minute chart. But they were basically the same. So there's an 80% rule that says if the market opens in the VA, it's going to get to that PLC at some point in the day. Does not mean it's going to happen like here in the first 20 minutes. It could happen an hour, 2 hours later, 5 hours later, whatever. But as the box here says, I entered a long here because we got so close to it, and I know those PLCs act as a kind of like magnetic for pricing. They're drawn to those PLCs and stuff like that. So I figured, and it was a little bit more of a not as a solid trade. I would characterize this trade as not, a real solid trade, just because, well, where am I putting my stop? Because it could touch this PLC anytime. But I decided, based on looking at the action, how it was going, how we got so close, how we were just kind of dangling in this area above the pivot point. I got a long in here right above the pivot point, and it kind of gave me a little scare, started to go down a little bit more, finally rebounded, and it came up and hit that PLC, and I got out there. So you see here, actually on this Friday, there was two rules affecting this price to go up, because there's another, and this is not an 80% rule. This is something I just discovered that happens, at least I would say, from my back. And again, this is from this rule is only something I discover or I research. I can't say what the actual numbers are. But this is called a settlement gap, where the price is within yesterday's range, but it opens either above or below the closing price of the previous day. From my research, that suggests that we're going to get back to that closing price about over 70% of the time at some point during the day. So since we're so close to those, PLC and the closing was basically the same, I figured we was going to hit that. And so that was kind of definitely a more of a discretionary trade, because we definitely could have came down here and hit that thing way over here. So yeah, I took that trade based on those two things. One's a 80% rule. One's just something I've researched that happens a lot. Okay, so that's 180% rule. When we open in the range, I'm sorry, not just the range, it has to be in the previous value area.
Yeah, so
it's going to hit the PS.
In your green, on your chart, it's the green volume area.
Yes. Yes.
It's the previous day.
So I'll go over the other 80% rule that applies here, and then I'll show you the other one that's not going to apply today. So there's 80% rules that I use. They definitely don't all happen every day. One of them definitely has to happen every day. The other two could happen, could not. So this just today had the one opening 80% rule because it opened in the VA area of yesterday, hit the POC that already been fulfilled, that's already done. And of course, there's the 30-minute rule, which after 30 minutes you have a high and a low. This is the 30-minute bar here. So okay, so after the market makes a 30-minute high and 30-minute low, I'm waiting to see one of those high or low breaks. 80% rule is once it breaks one, the high or the low, it's not going to break the other. So once we break the high, not going to break the low, so that most likely we're going to go up that day, although we can just go sideways, but most likely we're going to go up, but it's 80% chance we're not breaking that low. So that kind of gives you an indication of what the direction of the day is. We break the high, we're going up most likely, not going to break that low. Or if we do come down that low, I'm definitely, it's a trading opportunity to go long if we come down to that low. Knowing that it's most likely not going to get clearly broken. And the direction of the day is most likely going to be up. So that's the second 80% rule that I go by. Now on Friday here, I got a notation here. I entered a micro trade here. This is one of my strategies is I trade with micros. That's more of a directional trade. I'm usually in that trade literally anywhere from 30 minutes to 3 hours because I'm looking for a direction of the day and I'm looking for it to get to a certain target. And sometimes I get lucky to get there in 30 minutes. Other times it's literally I enter at 7:30 and it hits it at 11 o'clock. No, I don't know. So here we hadn't broken the 30-minute high yet, actually, but on the 15-minute chart. So I answered this. I actually got in this trade a little early, based on my discretion. I actually notated that here. I actually saw it get above the POC in the previous closing price, and I thought that would use it as a resistance. So I thought, okay, looks like we're going up. The 30-minute and the 15-minute were looking to turn bullish. They weren't really bullish yet, but they were definitely looking like that's what the direction they were going. I thought it would use that as a resistance, and I got in as a directional trade. I got in early. I'll explain. Oh, well, the other trade I get in where a scalp where something like this happens, where I'm just only taking 4 to 6 points, where I did here. Or of a momentum or liquidity grab where I know it's getting to that liquidity or support resistance. Those trades are 4 to 6 points, and I'm typically thinking I'm going to be out of that trade anywhere between, 5 minutes and 15, 30 minutes.
We also like to target just below previous pivots for liquidity grabs, because I know that that's one of kind of my thought process behind how the market works, and because the market loves liquidity, I think you kind of think about this consciously or unconsciously as well, because you target the POCs, you talk about it wants to go where liquidity is, because I do think the market always kind of just wants to go where liquidity is, I guess, and and so I have a few playbook setups that actually kind of target or kind of reverse off of points where there's probably liquidity sitting so just below previous swings. I do if there's a very obvious previous swing, for example, I like to target just below or just look for a long entry just below that previous swing. So
I definitely could
be the opposite to what the average retail trader would be doing, or thinking where he basically would have his stop. There I kind of look to enter, if there's a clear kind of, let's say a clear at the, I don't know, a clean pivot, a clean pullback on an uptrend day, then I like to enter long just below this pullback. I look for the order flow on the DOM and times and sales to confirm it and to show me I don't want to just enter long just below it and put a limit buy order there. I want to see price get there and then just being stuck, don't get any follow through, And if I then see big buyers coming back in on the tape, like 50 plus lots hit, like 50 plus, that's 100 lots, starts buying it, then I'm thinking like, okay, they just wanted the liquidity down there. They wanted to fill their big limit position. And now they're ready to take the market the other way. So like that's kind of one of my thought processes.
Right. Okay. So, I mean, I do that sometimes. Just depends. That's why mine is discretionary. It depends on how much of support I think that is, how much of resistance. My scalping is not like it's the ones I'm in the chat room, in the Discord room, Discord. They're more very super scalping where they're in and out 30 seconds. My scalping is more, I'm not going for 4, 6, or 8 ticks. I'm going for 4 to 6 points. And I'm typically in those trades somewhere between 5 minutes and a half hour. And it's either based on momentum, based on liquidity being close, or based on support resistance that the market is hitting, and I think it's going to get a reaction. And I'll show you another one later that's based on momentum. This first one early in the morning was not based on momentum. In the morning, I see the market, 80% of the time, is just going to go up and down for the first 15 minutes or so. It's not going to go straight in one direction most days. So I kind of saw this as it went up, kind of starting to go down, but it's so close, so I kind of traded that very discretionary. On this trade, what I was saying was I saw the direction as being long, but I didn't really have confirmation yet. So I got in early. That's why I notated that in my notes that, hey, that's not something I really should have done there. So I did recognize it right away. And when I recognized it, because a lot of times when I'm entering a directional move, I will have a place where I enter, but I also know that it's a directional move. It's going to go up and down. I don't know if it's going to go up first. I don't know if it's going to go down first. A lot of times in my directional moves, I'm only putting on half the position that I would normally put on it, unless it's really at a spot where, if it breaks this, I think the direction changes, then I'll put it on my full position, because that's the end of where I'm going to enter. If I think it's going, up, I'm not necessarily saying it's going to not go down from this point, and I will put on half position and pick a spot where I'm like, okay, if it gets down here, I'll put on a little bit more, and then that's it, and then I'll have my stop. So it may sound confusing. Hopefully it doesn't on your recording.
It's okay. It's okay. And do you like can I use fixed stops and take profits, or do you like to, if the price is close enough and you see? I always
have fixed stops and targets. Always. I don't always necessarily know exactly where my stop is, as far as, like, I know the area where I'm gonna put my stop, but as far as the exact number, sometimes I'll enter trade and I look at the, support, resistance, whatever, and I'll put the exact number in, but I know the area where I'm going to get out. So in this trade, when I got in, what I decided was, since I didn't realize, hey, this is too early. There's no sign. There's no break of the 30-minute high. There's the 15 and 30-minute are not bullish yet, although they look like they're turning bullish. So what I decided to do was, I'm not getting in again. I'm not going to, put a full position on something I don't know yet. So on this one, I had more of a mental stop. I said, if it starts getting below this pivot, I'm going to get out. Obviously, the exit button, when it got down there, I wanted to see what the reaction would be, and it immediately turned around. So I felt pretty decent, especially once we got back above.
That's kind of like just the setup I talked about that happened on Friday, like, because I know as well. I was looking, and then I just hesitated a bit, so I didn't take it. But I was like in my live stream saying like, now I kind of want along, but I didn't take it. Like, I didn't pull the trigger. But that's just like kind of what I mean. Like, if you have this previous swing, and then you kind of have, especially like if you have a day that kind of looks like it wants to uptrend, with your rules, you identified that as well. So I also kind of thought, okay, this looks like it wants to go higher today, and then you saw it come down and just tick like by 2 or 3 ticks below this previous pivot pullback, just 2-3 ticks below. It found strong absorption on the bid, and then we had huge buyers come in, like real big size on the tape. So that's why it kind of was okay. Like, they probably just took out all the liquidity, took out all the stops, because all those people, like with hard stops, put them probably just just around this pivot, in my opinion. Like just
Mhm.
my 2 cents here.
But for me, and I wouldn't have recognized this earlier, even maybe even a year ago. For me, I realized that I got in too early, so I did not add to the position.
Yeah, that's important.
Now, I want to make sure that people are clear when you show or play this interview. Don't add on to losers, but my strategy calls for I can add on if I put on half the position, because I realize that I don't know if we're going to go down further before we go up or go up further before we go down. So when I'm trading micros, it's the purpose of me trading micros is I put on a smaller position to be able to add. Now I either add to a loser if it's within my parameters or where I think it's going, or once it gets more confirmation, I'll add to a winner. So in this case, I got in too early. I did not add. I wanted to wait and got back up here. I felt pretty good, but I still didn't add. And then about here, it's about 8:15 or so, 8:15. Market, we still hadn't broke through, but going back to, I don't know, is my screen still sharing my 15-minute chart? I don't know.
Yeah, we can go back to it.
So are you back to it or?
Yeah, back to it.
Okay, so this is the 8 o'clock, which 8 o'clock is when the bar ends. This is the 8:15 bar. So this was getting very bullish, prices above the 50. The 20 now is crossed above the 50. Getting very bullish here around 8:15. And then if you go look at the 30-minute chart as well, this is the 8 o'clock bar. It's above my haul. My haul's moving up. It's above the VWAP. And it has my little custom arrows that I have when I think of uptrend. So about 8 o'clock, I see this is going up, and I just need confirmation of a break of a 30-minute high, but it's definitely like it's going up for me right about that time. So what I did was when it kind of consolidated here for a little bit, I said, okay, it's consolidating, but it's gathering steam. So I did two things. I need to show you a different chart now. One is I added to my micro position up in this area. I can't remember where. I added to my micro position up in this area because I felt very good about it going up. And this was my target, the R1 of the pivot points. Although if I would have noticed a gap fill, I might have targeted 65 because that was a gap fill and I did not see that. But anyway, it doesn't matter. I targeted this. But at the same time I added to this micro position, I made another scalp. That scalp was based on the momentum. My blue candles, my blue little arrows is showing very strong bullish momentum between the 5, the 15, and the 30. So that made me add to it. On that scalp, I only went for like 4.5 points.
Do you just for me, a couple of curiosity, and when you like kind of do those scalps, like where you enter just of momentum, do you like to enter on a pullback or do you like to enter on a break just market? If you see, okay, price is going up, you have the momentum, you just enter, or just do you wait for a slight pullback and then went? Or is it just discretionary and both?
It's discretionary. It depends if I think I'm gonna get a pullback, but this is my other chart, but let's see here. So it just depends, and I actually think I waited till maybe 8:45. So maybe 8:45 was about here, I think. Sorry, because that's our live chat, so I can't see. Okay, 8:45 was about this, but on bar. Okay, so again, I'm going by memory. I know I added to my micro position here, somewhere around here. Again, micro positions, micro trades are not something that necessarily momentum is going to take me straight there, and I'm going for a lot higher targets. So when I'm entering in my micro trades, I'm not expecting, it does happen, I'm not expecting the market to go straight to where I'm my target. I don't expect that on micro trades. That's the reason I'm entering micro trades, because I can I have the psychology to wait through pullbacks and lulls and stuff like that, and I can do it on those small positions. I can't do it on minis, so I add to my position here.
That's in my opinion, like that's so a fun thing about trading as well. Like depending on the size, you kind of like feel different in a trade. Like that's so curious.
Yeah,
Like it just doesn't
yeah,
make any sense. Like if you think logically about it, it doesn't make any sense at all to me have basically any emotions or feeling, because why are anger? Why does it make you tense? You're just watching some bars move on the screen, but
yeah.
at the same time
Money makes you
yeah,
do that.
at the same time you're connected with money, and therefore you connect the moving of the bars with emotions, because you're connected with losing money and winning money. So it's just a little
Right.
bar that's moving up and down is kind of making you emotional. Like that's so weird. Like the whole concept behind it actually, and
Yeah,
depending on your
definitely
risk
is.
tolerance, it's like I can watch a macro go against me for 20 points. Like I don't care if I think it's going up eventually. Like I stay in it. With a mini, I would be like, you know.
Right. Um, so, what was I saying? Okay, so like I said, I added to my micro position in here, but again, micro trades are different than my scalps. I don't necessarily expect them to get there right away. Again, that's just a different type of trade. I have a different mentality for those trades. About here, right where this mouse is, I guess. Um, go back to this chart, which hopefully you can see my 12 tick chart. It's the only chart that I don't have a time-based chart for.
Yeah, but I see like
Um,
8:30. Like I do see your cursor.
okay, so this chart is not time-based. It's based on a 12 tick breakout. Anytime the market moves more than 12 ticks, it's going to create a new bar. Anytime it stays within 12 ticks, it's going to keep on that same bar. So some bars can last literally 30 minutes if it's really slow, and some bars last 2 seconds. So around 8:30 or so, I start seeing this really strong momentum building up. 15-minute and the 30-minute was now really super bullish. And the 5-minute was confirming what my 12 tick. So I took a scalp here of like 4.5 points, and it went up. I think it took about a half hour or so. It went up. Got my little 4.5 points, but I kept my micro trade until I reached my target of the R1, excuse me, 58.50 or something like that. And I got out. So those are two different type of trades. A lot of times when I take a micro trade, expecting a I should say directional trade with micros, expecting a certain direction. Some point within that direction, I expect momentum to get very strong where I can take a scalp, because scalp, I'm only, I'm not letting it go against me a lot like I do micros. I'm expecting a move in that direction pretty soon and not go the opposite direction much at all. So a lot of times when I have a directional move on during the day, at some point during that direction where the excuse me, market gets strong in that direction, I will take a scalp within that. So it's two different trades. And that's the two different strategies I have, whether it's a scalp or directional trade. Um,
That makes
again,
sense.
the directional trade is with micros. Again, that could last. And again, if you're not used to this, if you're used to scalping, you probably have no idea or couldn't do this. It took me a long time to be able to do it
Yeah,
myself, but those trades literally could last 30 minutes to 3 or 4 hours. Um,
yeah.
my
You
yeah,
even
my
said
mini
like you even said like the other day, like you even said sometimes you put on positions like in the overnight and stuff like this with micros, like, and you still
yes,
sleep fine. Like
yes, because it's a very small position.
yeah, still
My
like
overnights, I have a rule. I only put on 2 or 3 micros. That 3 is the most I'll put on. Um, so um, so that was basically to this day was going back to the oh yeah. So I had one directional trade, which I added once I saw that it was confirmation in that direction. I had 2 scalps very early, and then this momentum scalp. Um, but that was it. So really, it's
and you do take very few trades. You like kind of said only 2 to 3 trades a day, if I remember
I have a
right.
three trade max. Now this one technically, I guess you could say,
Is
I guess it
this
was
is this
three trade.
is this something you kind of developed over the years and thought like, okay, you see yourself if you take more than 3 trades, you're kind of giving back money, or like
Yes.
accepting losing, so 3 is the like kind of sweet spot for you?
Yes. Yes, because I would say, I don't know, 80% of the time I took a lot of trades, it's a losing day for me
Yeah.
because I was just chasing. So if I'm not reading the market correctly that day, if it's not working, I need to stop. So 3 trades is where I draw the line. Now in this one, I had the scalp in the morning and then I put on the micro, so there's my 2 trades already. If I win both or if I lose both, I'm done. If I go 1 and 1, I can take a third. In this case, I had the scalp, that was the first one. I had the micro trade, but that micro trade at this point here hadn't done anything.
Yeah.
You know, it doesn't, I don't know if it's a winner or a loser. So it allowed me to take another scalp, and I did. And once I took that scalp in that one, regardless of what the micro trade did, I would have been done for the day.
Yeah.
I saw actually another trade somewhere along this line where it started coming down, but I was done. I turned on once I meet my 3 trade max. I do allow 4 trades occasionally if I do overnight or if I do a real small position and it was a loser and it really like lost like $40 or $60, then I will allow myself a 4th trade. But I put on a demo. I turn my dome to demo once I'm done. So this down move, I saw a trade that I liked. I did not take it because again I had met my trade minimum or maximum.
I do think it's a good thing to have a system in place that kind of prevents you from over trading, and because there's something like decision fatigue in my opinion. Like I think it's real. Like decision fatigue is a real thing.
Fatigue and for me it's just I typically don't make good trades when I'm trading a whole bunch of times.
Yeah,
Like I just
that's what I mean with decision fatigue. Like I do think it's a real thing. Like I think Iman even talked about in one of his videos about it. Like there's a thing like you can only make so many good decisions in a day, basically, or
Mhm.
like in a row, like especially emotional decisions. And in the end, like trading are emotional decisions. And the more decisions you make, the worse the decision gets. So that's why I even talked about with other traders about this. They kind of say like, yeah, you kind of need to structure your way as good as possible, and kind of till your trade, so till your actual trading hours where you're trading, like kind of limit the decisions you have to make on the day, because and it helped them like just kind of have a structured day, very structured day, till this point where you don't have to make a bunch of decisions, basically. Because decision fatigue is like in psychology, I think, but probably Iman knows better, like we can ask him later, but I think decision fatigue is real, and if you have to make a lot of decisions over time, your decisions become worse, and that's like in the end what
Mhm.
trading is about.
Okay.
So I've noticed this for
Um.
myself as well. Like I don't get fatigued
Okay.
just looking. Also, just if I just sit in front of the chart, just look at it. Don't actually take a trade. So I don't really get tired. Like I can sit there for like, or I don't tend to get the wrong feeling for the market if I don't take trades. It's a very weird thing. Like I've noticed, like if I sit there, for example, the one day, like I was done for the day because just I said, okay, I'm done for the day, finished. I think I had a good green day, and I said, okay, like right now I'm just, I don't, and I had nothing to do that day, so I kept on my stream on, and I just sat there for, and I had like a couple of people in chat, like more than usual, and they asked a bunch of questions, so I kind of just sat there for 2 or 3 more hours and just kind of explained my edge, and was basically just reading the market and like kind of giving my 2 cents why it's going where next and stuff like this. And I kind of almost had the best read on the market ever. Like, and then I've just kind of tested it, just sitting there, looking at the market, letting it do its thing, but not actually taking trades. At least for me, I don't get trained by that. I have a constant good read on it. But the more decisions I have to make, the worse it gets. Like, it's about
Sure.
decision making in the end, I think. But obviously, I think
Okay.
it's also individual for everyone. But just something to
Okay.
keep in mind.
Okay. So, kind of wrap this up. Are you looking at my 5 minute chart right
Yeah,
now?
having an up.
Okay. So my 5 minute and my 12 tick chart and my 30 and my 15 are always on my screen because I have 5 screens, including my laptop screen. I have 4 screens, I guess, for my trading, but one of them is an ultra wide, so it's kind of like a 5 screen. So I'm always looking at the 15 minute, the 30, the 5, and the 12 tick. And then the 30, I mean, the daily and the 2 hours, just something I glance at once or twice a day. Um, so this is the 5 minute. This is the chart I learned to trade on back in 2004. Of course, there was no volume profile then, but there was pivot points. I don't think that there was no VWAP either invented back then. But so this is a real-time trading chart only. It's not 24 hours. So I want to talk about the other 80% rule. And of course, all rules are discretionary when it comes to trading. You know, you have to use some discretion. And what I mean by that is I'll show you the 30 the 80-minute, excuse me, I'm getting all my language messed up. The 30-minute high and low is you have to use discretion on that because it's not always exactly 30 minutes. Because if 30-minute bar after 30 minutes is still going up or it's still going down, I'm going to wait to at least retrace a little bit before I say that's the 30-minute high or 30-minute low. But let's take a look at the chart. This is last Friday. And then going into Mondays here, I've marked the PLC, we're in red. And as the day goes on, that line will extend. And I've marked the closing price. And as the day goes on, that line will extend. So then once we open, I know, you know, based on where we open, if we gap down, gap up, stuff like that, some of the 80% rules will come into play, some of them not. And I'll, you know, in relation to the close and the PLC, I'll see where we're at. Okay, so let's talk about the 30-minute rule as a discretion. This was Thursday. Let's see here. 6 bars in, this is 7 o'clock. So this is 30 minutes. So that would be the 30-minute high and low. But to me, it immediately went below that and didn't really retrace till here. So 710, 715, that's really the low for me. But although it did retrace here at 7 because it came down and then went up. So you could have used that. But sometimes you just have to use discretion as to the 30-minute high and low. You can't just say exactly, okay, that's it. This one's a little bit, you know, it's a little bit subjective. You could use this, or you can say, no, it's not till here. And that happens. And if you use this one, then it really didn't break very cleanly. But, you know, that's just a discretionary thing. Sometimes it's a little bit more clear. Sometimes it's really not clear. Let's see, this is Wednesday. So Wednesday, to me, it's a little bit more clear. This is 7 o'clock. This is 30 minutes. The next bar went a lot higher, and then it retraced. So to me, the 7:05 bar is the 30-minute high and low, right here, and right here. So once it broke here, to me, once it broke here, it's not going to break this low 80% of the time. And most of the time, it's going to keep going up. But I think on Wednesday, it really just kind of went sideways, if I remember correctly. Oh, and Wednesday was the Formica day or whatever, FOCM day. So you really can't count that day.
Yeah, it's
It was
always
an
weird.
exception.
Yeah.
Yeah, so saying that if you're a trader, FOCM days, you throw the 80% rules out. Like if it
Yeah.
hasn't happened or fulfilled before that time, before 11 o'clock, at least my time, I don't know what happens your time, then throw those 80% rules out. Those don't count.
Yeah,
Okay,
sure.
so let me just show you the last 80% rule, which is the first 80% rule I ever learned. Though, let me find it. Let's see when it happened. Show something that's very clear to see. So it's very easy to give you an example of. Doesn't happen all the time. Went out, came back in, but really never left much. Let's just get a clearer example, because just like the 30-minute high low, it's a little bit discretionary, a little bit. Okay. going to show you this just because it's a good example of when you have to use discretion. So, no, I told you about the link I have in my forum, so hopefully you kind of reference that when you do this video, so people can kind of read along.
Yeah, no stress. Like I'm gonna just edit out the scrolling then. Just
Okay.
to a good example, I guess.
So for me, and I'm gonna show you a different example, but I want to show you this example because this is discretionary. Trading is all about discretion.
Yeah, of course.
Have to learn to use it in context. So obviously we gap down here. Then we broke the 30-minute high, which would have been, this is 7 o'clock. Really, I don't really even know. See, this is hard to really determine your 30-minute high because it really just kept going higher and higher and higher.
Yeah.
It really didn't make a 30-minute high till what, like 7:20. And then it gave you a little pullback, barely broke it, came back, and then really broke it. So on this one, the 30 the rule is, so just so you know, the rule is whenever the market enters into the previous VA, which would have been here, the previous VA is where my mouse is. If it opens outside the VA and it enters the previous VA value area, consecutive 30-minute periods, that gets confusing because people use 30-minute bars, and that's really not correct. It's two 30-minute periods. So for this day, it entered in about 9:35 my time. It entered into that. So that's the first 30-minute. That period starts at 9:35, 5, 10, 15, 20, 25, 30. So here's that 30-minute period from, I don't know if I could show that. What's this? Is this a box? This is that 30-minute period. It entered into VA only on this one. That's all it has to do is in that 30-minute period, either just one bar has to enter. That's all that has to happen. That 30-minute period is fulfilled. Now the next 30 minutes, at least one bar in that 30 minutes has to be within that, above that or below, depending on where you're going, has to be in the VA area. And as you can see, 10 minutes later, we're back in the VA area, and that means that 80% rule has been fulfilled. Two 30-minute periods have been back in the VA. Now, in this day, on this day, we didn't fulfill this till after 10. Again, this is my time, so I would say after almost 4 hours into the day. That's easier for people to understand. Almost 4 hours into the day, we didn't actually get that 80% rule fulfilled. You could definitely take it, but at that point, I'm going to be looking at the range of the day. How much of a range have we used? Is it likely we're going to get way up here at the top of the range? Because the 80% rule says 30-minute periods in the VA. When you started outside the VA, it's going to get to the other side, and it does happen. I've seen it time and time and time again. It does happen, but in context. So I believe this day, the range was pretty close to the average. It was late in the day, so I really wasn't counting on this 80% rule to fulfill, and it definitely did not. Anytime for me it doesn't fulfill by 11 o'clock, I'm not going to even count it. Like if it takes to 11, or I should say, I'm sorry, if it takes, what's that, 4, if it takes over 4 or 5 hours to get to fulfill that rule, I'm just going to ignore it. I'm ignoring it. This one took about more like 3.5 to 4, so not quite that much, but pretty long. But it already met or almost met the average
range.
I believe, yeah, average range. So I just really wasn't looking at it to go way up here. Another 14 points above the where it got. So I kind of discounted it, but that is an 80% rule. That is technically the rule. 30 minutes here, 30 minutes here. You're in there. Now the rule also states if it starts in the previous VA from yesterday, obviously previous VA, we open in that, but then we come out of it. And for me, it doesn't say how long, but for me, it has to be a complete 5-minute bar. We come out of the VA and then go back in it. the 80% rule still applies, just like it started outside of. It's the same thing, and it, again, I've been looking at it for years. It definitely works. So I'm going to give you an example, just a more of a cleaner example. Yeah, this is that one I showed you the other day. So I apologize. My data service, my charting was having about a week or so. That was missing some data. Once it downloaded at the end of the day, it was having some issues. So I'm missing some bars. This is the day where it opened. Obviously, we gapped down. We started to come up. The previous VA is here. It touched it on this bar. And then you start counting, 5, 10, 15, 20. It almost fulfilled the rule. Not quite. 25, 30 minutes here. So that's your first 30-minute period. So if it ends that first 30-minute period inside the previous VA, then the next 30-minute period has to be inside the VSA because it has to start in there. So that's fulfilled. It's fulfilled as of this bar. It's done. That rule is qualified. That means the market is going to at some point get to, looks like 44.1950.
And you don't, like, that's what you said the other day, like you don't try to not look at this rules for setups. So you look like more to just keep you aware what kind of plays are still in play, and then later maybe get into a trade that gets into this direction once you have other confirmations, or like kind of like just keeping you out of short trades, for example, here, because like there's probably a high chance of this hitting at some point and stuff like this.
Yes. All the 80% rules, which again I've gone over 3, the opening 30-minute high low, the opening rule if it opens in the previous VA, and this 80% rule, they're not trade setups. The rule, you don't get the rule and go, okay, I'll just go long. That's not how it works. As you can see, if you did that here, which when it fulfilled here, if you got long thinking it's going to go up to here, it went way down here first, meandered, and didn't get up there till 11:15. What's that? 4 hours later.
Yeah.
Eventually got there.
Yeah, and you have just horrible risk reward and place for stop loss.
Yeah. So the 80% rules are not trades. Let's just repeat that. They're not trade setups. They're not trades. They're not entry points. They're just guidelines, which is what I stated at the beginning. I have a lot of guidelines. The guidelines tell me what direction we're going to go and what direction to mainly look for trades. I may scalp a different direction, but if I see 80% rule tells me we're going long, well, then I'm not making a directional move with micros going short.
Yeah.
There's just no way unless something breaks
so important. Like a lot of people, in my opinion, for example, like beginners, like I've struggled for this myself, like do not build context. Like they just go in and just like have their setups, have their system, whatever, and then they have their kind of rule apply, and just the one thing, the one strategy, and it applies, chuck, and that's the entry, and they take it and have a fixed stop and fixed profit, and just to have context and understanding of what the market is doing that day or right now, or whatever period or time frame you look at. For me, for example, it's where there's been recent buyers and sellers, where might people be stuck, where pivots that might be stop run, for example. Like I do need context. I can't just sit down, look at the order flow, just jump into a trade because I see something that just doesn't work. I need to sit there, look at it, build context, have a feeling where people might be stuck and stuff like this, and then take a trade. Look, context is so important.
Yes, I didn't mention that on the first time we did this. So context and discretion in trading is so important. None of these 80% rules are you supposed to trade off of them or just enter off them. You're supposed to look at them and go, okay, that's the direction most likely. Now let me find a trade in that direction. And then you use your own setups, whatever, to try to find a trade in that direction, because most likely it's getting there at some point. So that's what they
maybe use it for a target or something like.
Yeah, targets. Yeah. They're targets and they're guidelines. You use if you know there's 80% chance that we're getting to 1950 at some point, if you find a long in your own system or whatever, you're gonna most likely want to target maybe 1950. You know it's getting there. You don't know, but you have a high probability it's getting there. So these 80% rules are none of them. I don't enter trades based off of them, but the more, if I have 2 of them that are effective and they both say the same direction,
awesome.
And maybe the 15, yeah, and the 15 30-minute chart is confirming what the 80% rules are saying, That's even a higher probability. But sometimes, some days you'll get 80% rules that are basically the opposite of each other. So in those days, you want to be more careful and go, I don't know. There's some days where I don't know the direction. I just don't know. There's no indication. I don't know. Or it broke the 80% rule and went to 20% the other way. So those days, I try to make sure I, don't get too carried away. Once I don't know, if I don't know a direction, I don't feel comfortable trading, then most likely the days I don't know, it's just too confusing. It's too many signals in each direction. Then I will only probably look for a scalp, some kind of high momentum, or the price gets above. I mean, at a resistance or support, and I'll try and take a little 4 or 5 point scalp because I don't have a directional move to trade. It's mixed, and I'm not going to make a directional move trade unless I have a clear signal. So some days I only do scalps. Some days I do directional. Some days I do both. It's just depending on what the market's telling me. I let the market tell me and give me clues, and I base my trading a lot off the 15, 30 minute and what the direction is telling me, and combine that with the 80% rules. It gives me a very good indication of the direction, and I'm very good at picking a direction. I think over the time I've been trading lately, I say the last couple of years, the direction is really something I've been good at, but always trying to find a trade in that direction. Sometimes I
Yeah, it
haven't been
can be
so good at that,
difficult. Yeah, it can be difficult.
but getting a lot better at that. And I think I covered everything. That's a lot.
Yeah, it's a lot. Like it's a lot to process for the people watching this as well. But like that's also the good thing about kind of podcasts, I think, and then especially this. Like you can rewind them, you can rewatch them, you can replay you can go back and just kind of replay the things that you kind of don't get the first time, stuff like this. I think you did a very good job of explaining your edge. Like, thanks for coming on here again. Like, even that you had to do it twice, I guess. Like, sorry about that. Yeah, it's cool, and obviously, like, if the people wanna like contact you, have further questions, like you are pretty active in Emos Discord, what I've known. Like you have your own forum there where you post your trade results and stuff like this to keep you accountable yourself. Like that's also something we didn't talk about yet, because like that's how we kind of got to know each other. We kind of just posted each other's P&L every day on Emails Discord because basically I just didn't want to make stupid mistakes, I guess, and yeah, and just like
Yeah.
not blow accounts anymore.
I definitely have a forum in iMan Trading Discord, I guess. I post a lot of stuff there, although a lot of times I don't have time to really post my trades. I just post the results. I post what I'm thinking. I post what I think the direction is, stuff like that. But I'm no pro at all.
Yeah, it's no problem.
I don't.
It's
I
always a progress. Like we didn't talk about this time so much, like we did on the first recording. So it's a process. Like trading is a process, and you mentioned it so well. Like in the first one we did, like it's a current process. You currently have to evolve. You currently have to get better. Like just improve every day, and like if you don't improve, other people will, and in the end, like you're competing with other people, in my opinion. If you're competing in the markets, it's nothing else than competing with other many people, and they will keep on improving. The algos will keep on getting better, and it's everyone you're competing with in the end.
Yeah, definitely. I'm just learning like everyone else. I'm continue learning. I watch a lot of YouTube videos. I get a little bit of nuggets out of a lot of things. A big influence for me was Mark Douglas. I watched Tom the Trader, which I just recently learned about. But then I watched just random people's videos. I actually can get a lot of little nuggets out of little videos. I don't really believe a lot of that stuff people say. But even some of the videos where I've watched where they're selling courses, I've gotten some nuggets. Like that 15-minute chart was actually after I watched a video on something, and I incorporated the 15-minute chart to be between my 5 and my 30 because I already had the 30, and it helped me out tremendously. And I don't even know what video I got that from.
Yeah, it's like you gotta build your own system, and you gotta find what works for you, and you gotta pick. Like you gotta go out there and like cherry pick from everyone. Pack. You You gotta pick from
Right.
all those people, like the good stuff, and like implement it into your trading, which works for you, and then you kind of find your system in the end.
Yeah, it's definitely just just doing it, repetition, all that stuff. So that's my style. Again, if you're a scalper, it's really not going to help you, but that's pretty much what I do, and I've been pretty successful with it, at least better than in the past, and it's getting lead me in the right direction. I just have to make sure I button up my psychology part of it. Sometimes still make mental mistakes. And I'm still cleaning that up a lot better. But lastly, I'll just say, I think I said this last time. There's a lot of videos, there's a lot of books, there's a lot of I don't know chat rooms about strategy and trading. Strategy really isn't the biggest focus because there's a lot of strategies that work in trading. It's really the money management and the psychology. People give up, and I was one of them. I was one of those traders that went from strategy to strategy every month because the strategy doesn't work. No, it's just me. I wasn't working.
Like
So
that's a very good point. Like most
yeah, there's a
strategies
lot
work
of
eventually
strategies.
if you dig into
Stick
them.
with them, fine tune them. You know,
Exactly.
get them to where it's comfortable
And
for you.
again, context and intuition. Like
Context,
if you trade the same strategy in the same system for a while, you start to build intuition for it. You start to build context for your specific strategy. And I mentioned this in one of my videos. It's like experience is such a huge factor, and like obviously you get experience as a trader as a whole as well. But if you constantly keep on jumping system, like I think it's you always start out with a baseline with a new strategy. If it's a completely new strategy that has nothing to do with your previous one, you start out basically at zero again. Okay, and then you get better with the strategy, better. You might even see some success, and then it has some drawdown, and then it's the strategy, and we throw it away, and then you pick the next strategy, but then you start at zero again. Like both strategy would work if you just stuck with them long enough. So I think just
mm,
obviously not everything every strategy is I guess profitable to begin with.
no,
It's a
definitely
huge
not.
that's a
Definitely not.
huge problem.
There's a
but
lot. There's a
but
lot that are profitable that people stuck with it.
yeah, but
And you just have to have all three. If you don't
yeah,
have a strategy, good management, and good psychology base, and know when to not break stupid rules like doubling down on trades or trading too much or revenge trading. If you get those locked down, you got money management. Well, then there's a whole bunch of strategies that could work. It just depends on what works for you. Sometimes it's the strategy that's making your psychology messed up. Like
exactly.
there's some there's some winning strategies that only win 30% of the time, but they're a winning
Yeah,
strategy.
we
But can you
talked
handle
about
70%? Can you handle 70% losing?
exactly that's what we talked about the other time as well. Like for example, like we talked about Tom Hoggart the other day. Like it's like he's an awesome trader. He trades very well, but I could never trade this way. Like my psychology wouldn't handle it. I'm a bad loser in general. Like obviously his entire mentality. That's also why his book is called The Best Loser Wins. But he's a great loser, so he can make his strategy where he has like one trade that makes his entire month for a year because he keeps on adding to winners, and if it goes against him, he cuts him a break even or for a small loss. And if it wins, he adds, and then he has this one huge win, and the rest is all small losses. But I couldn't handle this. I need constant winning. Like that's why I'm scalping. I have a high win rate. I'm scalping. That keeps my psychology in check. So it's
Right.
individual for everyone. But I don't need the big winners either. Like I'm fine with taking 4 or 5 ticks on the ass. Like if I take a point on a trade, like I'm fine. Like taking a point, yep, bust, great trade. Some other people think like I'm only taking a point when I have a kind of a worst case. I mean, I cut them early as well. I cut them like most of the time if they go against me for a couple of ticks as well. So but I have a worst case stop for 10, 15 ticks or something like, and you
Hmm.
if you go there and you kind of risk, let's say 10, 15 ticks or 2, 3 points, and then you only take it for 4 or 5 ticks.
Right.
Some people can't handle that, so it kind of depends, I guess.
Yeah. Definitely. You just have to pick your own style, but stick with something
Yeah,
and just get your money management and your psychology in check. a good strategy is going to have a good money management system built in, but sometimes you have to make it your own.
You always kind of have to.
Yeah,
I think you have to make your own anyways. Like have
you
you
just have to make your own.
and have
Mine,
you?
mine basically came piece by piece.
Yeah,
uh,
it's with most
um,
people.
yeah, it's just that's how mine is. Mine's very confusing for some people. Obviously, I got a lot of these different time frames and all that, but for me, it works because I can pretty much see all of them.
Yeah, and
And again,
you look at them at once. Like you look at this. You've looked at this so much. It's become unconscious for you, I guess, and you kind
yeah,
of all this is connected and like pulling together and stringing together and just making sense. Like that's you have confidence in it. It makes sense to you.
yeah,
Same that for me, order flow makes sense. It just makes sense.
right,
It just
right.
that
That's
clicks with me.
exactly it.
Like
Yeah,
just straight up
I don't do
candlestick.
order flow.
Yeah. For me, for example, it's just straight up price action candlestick trading just didn't make much sense to me, to be honest. Like, and once I saw the actual transactions and interactions, like this made so much sense to me, and then therefore I trusted it, and therefore it kind of just resonated with
That's
me. So
definitely, yeah, that's
everyone has to
definitely.
find their own stuff, I guess.
It's also just recognizing sometime when either you or your strategy is just not like it's not there today.
Yeah,
That
that's a
takes a
big one.
long time
That's
to
a big one.
realize.
That's a big one.
Like if I don't know the direction, if I can't figure out the direction, I'm gonna must trade much less, and I'm definitely not gonna make a directional trade. I'm gonna be like, well, let me look for a scalp because I have no idea. I'm just gonna look for some kind of momentum or reaction against the support or resistance because I don't know. There's 80% rule says we're going up. The 30% rule says we're 30-minute rule says we're going down, and I'm a 15-minute and a 30-minute is the opposite. I don't know what we're doing. So
Yeah,
that's why you have to just realize some days it's just not your day. That's probably really hard. I mean, I would say no. That is really hard. That takes a long time to develop to know, hey, you know what? My strategy or my mentality is just not great today. Shut it down.
yeah,
Instead of I'm gonna force it, I'm gonna make it work today. And
yeah.
it's not gonna work today.
I have the same issue. Like I want to sit down every day, trade every day, take the trades every day, and it just sometimes I don't have the volatility and just not walking away and just getting
You have
chopped
to
up in
walk
the
away.
mid range. Yeah,
You have to walk away.
it's
That's why I have the three
yeah,
trade rule. So
yeah.
I can't make too many. So
It also keeps you from if you're low, you're only allowed to take those free trades. It makes you more picky on the trades as well, I guess,
that's
because then if you
that's the number one
is
key.
this really the trade I wanna be taking today? If I'm only allowed free trades, is this really good
Right,
enough for me to make my
right.
one trade of that, or am I just better off waiting for another one? Like kind of
That's what
like
it made me do.
yeah, kind of keeps you out
It
of
made me go
those
like,
samey.
yeah, it kind of keep you out of those trades where it's like, well, it could go there.
Yeah,
I could
exactly.
trade it. It could. No, I
That's
don't want those.
dangerous.
It could.
But why would
I
you
want
like?
that high
Yeah.
probability.
Well,
Yeah.
you want that high probability. Like so I also sometimes I do have like this is going down, but am I do I want to take it because I kind of see it goes down, but I really would need to risk like 3 points, for example. And for me, risking 3 points is a lot. Like I would like to have a place where I'm wrong, like three, four, 5 ticks away, at least, and then where I'm kind of wrong, so I can get out close to break even on the first pulse back. If so, I like to have an emergency stop, like away, like 2, 3 points away, and have a kind of a point where I'm wrong, like I guess like 2, 3, 4, 5 ticks away. If it trades through it on volume or whatever, depending on how it trades through it, and then I like to if it trades through it, I like to get out on the first kind of small pivot back towards my entry, so I can cut it for a very small loss. That's just for me. And then if I just think, oh, this is clearly going down, but I'm really only wrong if it just goes more than 3 or 4 points against me, like, oh, I can't take this trade. Yeah.
Yeah, that's kind of like how my micro directional trades work. Sometimes I know the direction, or I think I know. My risk at that point, once I figure it out, I'm like, wait a minute, but I'm already here. There's really
Yeah.
I don't really have a place where I can safely get in. So I have to like, okay, I think the direction's going up, but I don't have an entry. There's a difference between an entry and what you think's going to happen. I
I
have a lot of
think
days,
I might play
I
around
have a
with
lot of time
this.
for that.
I might
Well,
actually like. Maybe I'm gonna pick that. This is maybe one nugget I'm gonna pick for you. Like maybe I start having another chart open with micros. Just maybe on Sim first, like with micros, and just think I've got a good feeling for the direction where we're going. I'm just entering a micro, maybe adding a little bit to it, depending how it goes.
Yeah.
Like I'm gonna try this. I think.
But before you do that, you have to know before you enter. You have to know, okay, if am I getting out totally if it goes down or against me, or am I adding here? And if it starts to go my direction, where I'm going to add if I go. You have to kind of know your soft like stops where not really stops soft like hey I'm gonna add here or no I'm getting out here
Yeah.
because there's sometimes where I put on a micro trade a directional trade but we're at the let's say I think we're going down we're at the high that I think we should go if we're going down I don't think we should go any higher well then I'm gonna put on a full micro position I'm getting out whatever point I have I'm not adding to that position because I'm already at the we're already at the edge of the market in my opinion. So if we're at the edge of the market, there's no adding. It's you're wrong. So get out.
Yeah, sure. Like I think like that's a big one. Like for example on Friday, like I do remember on Friday I had this trade like the trade we talked about like with the reversal. Like I kind of hesitated to get in for a second and we just went so fast. And then I was saying like no I know this is a big move. Like I know it's so going so big and so high probably. This might be even the
but it was
low,
too much risk.
but it's just the entering here is just too much risk. And I was just saying, I hope we get a pullback. I hope we get a pullback. I hope we get a pullback. But we didn't. And then, like, and eventually we did get a small pullback. And I wanted to enter like around 43, 25. I think I do have it in my stream. Like even in my trade review today, I think I posted it. And I just didn't get filled to one tick. Like it just one tick didn't fill me on the pullback, and then just went completely into the other direction. That was just very painful. But it's just, yeah, I guess
that's what micro.
But
I would say that's why micros have been so helpful for me. Because trading minis, I couldn't trade that way. I couldn't sit there and I only got one chance to enter. So if it didn't pull back, or if it didn't give me a low risk, either I miss it, or I just took it. My risk reward being all screwed up because I was FOMO.
Yeah.
So I had to do it, and that's where I got in trouble. I would risk too much. I would pass up on the trade, see it go my way, get pissed off, and then enter at some other random point. So micros have been a savior for me because I'm like, okay, I know this direction, but I don't know if it's going up from this point. And I just know the direction.
Yeah, and it also keeps you out of taking a mini trade at this price. Like,
right.
If I know, like, this is not a good trade to take on a mini, like, because my stop is kind of wide here. Like, okay, let's just take me this on 2 or 3 micros and then maybe add on a pullback. If the pullback falls through, I'm out. But maybe on the first pullback, I would add like 2 and 3 more micros. If it just shoots up, and maybe then I can still add on another pullback and then just take it to the target. And
yeah, it allows you to. It allows you to scale in.
Yeah,
it allows you to scale in. Yeah, and like I said, the only reason I didn't scale in the first time on the pullback on Friday because I got in too early. I knew I got in too early, so I wasn't comfortable with my direction yet, so I didn't add. I'm not comfortable not adding, but once it got to like 8:15. 8:20, I was comfortable and I started adding.
Yeah.
So, but yeah, that's it, man. You need to get some rest.
Yeah, I'm gonna get some rest. Need to be trading tomorrow fresh. So again,
what time's the market open for you? Like 3:30?
3:30. Like it's perfect. Like I used to previously I was doing sports and it was professional and it was just perfect. It was training in the morning. Also 10 to 12, coming home, eating lunch, short nap, then trading. Then maybe another short nap, and then going to the evening session, training again, and then getting sleep. Like it was perfect. Like, yeah. Now I'm just focusing on trading.
All right, man. Well, I guess I'll see you in the morning. When does this post or when does this? I'm
gonna be putting it up someone next week. I hope more maybe Monday, Tuesday. Like I'm gonna posting it in Eminis Discord. If you like, and I can also post it in the forum. I need to edit some kind of stuff out of it, but
okay.
But I guess
it's cool.
So all right, thanks for coming on, and see you Monday. I guess.
All right, man. Good luck tomorrow.
Thank you.